Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. Today is Thursday, and the markets are in the green. I know we said that yesterday, and it didn't exactly kind of hold up later in the day, but they're back in the green off of some good news this morning. Michael talked to you about that. I will start us off with the interesting note, and we'll kind of chuckle about it, but Warren Buffett owns more treasuries than the U.S. government right now. So anyhow, I'll show you the article, and I'll say how it's why kind of not a huge deal. But I'll break that down for us, and then I'll hand it off to Mike, who's going to talk about the jobless claims we had this morning, which is kind of why we think the market is in the green. Off of we're kind of worried about that unemployment number. This isn't a direct reflection, but kind of an indirect indicator. But yeah, so he'll talk about that and why the market's in the green, and then lastly he'll close with some of our favorite topics. Is kind of the psychological part of investing and why it can be so difficult for some folks. But he will open that. He will bring that out for us. And then finally, at the end, I will conclude with tomorrow. We do have a special guest we'll be hosting again over Teams here, so he's not in the studio with us, but he's in town here in Austin. I met with him yesterday, and that's an author of a kid's book as well as a keynote speaker on money mindfulness. So super kind of famous guy. So we'll have him on our show tomorrow. Before we begin today, this is a financial education presentation. You have to do your own due diligence before acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are mine and Mike's alone. All right, here's that article I was talking about from Warren Buffett on CNBC.com. He now owns more T-bills than the Federal Reserve. That's insane. But then again, their job is to sell them. But why would Warren Buffett be in? He sold Apple last week. He sold some of his favorite, Bank of America, last week, and he bought a bunch of T-bills. Mike, if you'll scroll down, you'll see where the percentages are for what the T-bills are paying, and then you can stop there. It's down a little further. You'll see it. Why would he be loading it? There you go. Why would he be loading up on these things? Well, a little bit more so you can see there's four of them there. What you'll see is that he's either making a massive recession call, which I don't think is the case. I think he's just taking a little bit of risk off. And Mike and I were talking earlier. It's just like, what is the right strategy? Not that we're advising this to a client in actuality, but if we did have a 93-year-old multi-billionaire type client, I do think a conversation of Steve and Mike, how should I invest, would involve a heavy chunk of treasury bills. So you can kind of see, the ones that are in 3 months or lower are still paying over 5%. That's 6 month and over category now, just under 5. But if you remember, just kind of flash back to 6 months ago, we could get you a 6 months. We use CDs mostly. A couple guys in the book use treasuries, but I use CDs myself. We could get you a year-long CD for 5.6% or so. Now it's dropped, down to where it's at 4.5 or so. So it's kind of crazy how much these have come down. But he still, obviously, Buffett's buying these, so he still feels that they're the place to have his money. Maybe it's a holding pattern for something else. Maybe he's waiting for the market to come in to redeploy it. It's hard to tell. We won't know until he does his next newsletter. But certainly an outsized position of that size for one of the largest investors, if not the largest in the United States for individuals, is a pretty impressive holding. So anyhow, I just wanted to show you that article. Mike, you can go ahead and bring that down and you can share over to your screen, and we'll transition over to you on why is the market up today so much.
Okay, yes, we'll start off today. We'll take a look, and we are seeing green across the board, although something very interesting, green across the board except for the Russell 2000, which is the smaller stocks. So I do think that's interesting because when we see the NASDAQ go down and the Russell go up, that indicates some sector rotation. Looking at this, it's almost like, hey, we haven't given up on those big tech stocks yet. We're not putting all our money in small companies. So and the small cap has continued to lag large cap. So why is this up? The headline is labor market data soothes recession fears. And it's always is good news, bad news, good news, all this. It's good news is good news is good news. So the good news is initial job claims went down. So down from last week and went down 17,000 less initial job unemployed people. That's good news that it's less. The next set of good news is that means there's less chance we're going into a recession where lots of people are unemployed. There's less chance. And then the third piece of good news is the markets are up. So it's kind of like that little cycle there. I love good news is good news is good news. I mean, I want people to have jobs. I want our economy not to be in a recession, and I, of course, want the stock market to do well. So that is the news. We're going to see this kind of information for the next several months until the Fed starts cutting well, we're going to see it forever, but they're going to start cutting the discount rate, and we're going to see this, unemployment's up, unemployment's down, inflation, they're going to be looking at all these numbers to make this decision. And then when they start lowering the rates, and there's an expectation they will, which is why those Treasury bills Steve showed, why their returns have went down, they are expecting it. So, and those rates will continue to go down. So that's how we're seeing this play out. The other thing I saw in this article looked really interesting. It says right at the top, this is one of the biggest barriers to financial wellness. It's like an emotional glue trap. I mean, talk about clickbait. I couldn't resist. I was exercising. I saw this article. And I was like, I got to click on that. What is it? What's the glue trap? I got to see this article.
Right.
So, and what it is, it talks about not wanting to look or not wanting to actually get into your finances. And I'll show you a couple highlights, but I know in my past, there's been times when I tracked every single transaction in Quicken. So every time I charged a soda at the Speedway, it was logged into Quicken. Every transaction down to the penny. I mean, it's a lot of detail. If you're nerdy like that, we can form a club. There's about 10 of us. The more general is people don't look at their finances. They're like, I don't look at my retirement. I don't look at that account. And I manage it myself, but I don't look at it. I just hope it goes up. And while if you're invested with us, you certainly have the right to do that. And we are looking out for your best interest, and it's okay to do that. If you're doing that on your own, it's not always the best thing. So, I want to scroll down a little further here. And here's one of the reasons why people do not really dive into it. They feel embarrassed. It's almost like, I'm going to say it too, about weight loss. I don't want to step on the scale because I don't want to see the number. And then I'm going to have to take some action. Sometimes people I don't want to look at when I might retire and if I have enough money or how I'm going to build this up, because I'm pretty sure I'm not on track and I just don't want to know. So I do understand that I empathize, and it's hard to take action, but that's part of what our role is. And we'd love to just, talk to you, just do a consult, talk to you through this and how this all would work as far as planning out your retirement. Our goal is to maximize life by maximizing wealth. If you're not looking at that underlying condition in there and you get to retirement and you're like, I'm ready to retire and I've got 50,000 saved up, you're counting all on Social Security and you may not have enough. So, I just thought this was a great article. It's the psychological side of diving into financial wellness. With that, I'll turn it back to Steve.
Yeah, and you can go ahead and leave that up, Mike. I think a good point here is often we'll receive clients that reach out to us that have been in this for a period of time, like a decade or a decade plus, where now it's kind of gotten to where they know it was not good. Now they kind of are realizing that it's actually bad and that they're reaching out for help. And, everybody's got to work through their own personal. But certainly if you're in that state where it's not good, it generally doesn't just turn around and get better. That is the point where you need to reach out for help. And, if the earlier you bring us or any other professional in to kind of help solve a problem, the more room they have to be able to help you work through it. Where often if you're coming in way late, then it's we've got some really tough decisions to make. That may seem draconian to try to even, to kind of get you back where you need to be. So again, reaching out sooner is better. It's not always easy, but if you're hearing Mike talk about this and feel like, hey, that's me, then it's probably time to just go, I call it adulting. No problem. Everybody wishes they were the 16-year-old that has literally nothing to do all the time. Wouldn't that be nice? But yeah, we don't. We have responsibilities, and our own financial wellness is something we owe ourselves and our family. So good stuff, Mike. Appreciate that. Last thing I'll close with, if you have a second, Mike, type in David Delisle. The last name is Delisle. If you caught that.
I did not. DEL.
Try to get Delisle. He'll pop up first. He's the only one I found that's out there. That's him. If you go to his website, thedaviddelisle.com. This is who we have in our show tomorrow. He's scroll up a little bit. That's his book, but you'll see down at the bottom there. That's who he is. He's a keynote speaker. He's been on all the big channels. He's a local friend of a client here in Austin, so I got to eat lunch with him yesterday. He does keynote speeches on money mindfulness. So tomorrow we're going to be at 10 a.m. Central Time, 11 a.m. Eastern for our listeners. We'll try to go live and broadcast live for that session if we can't do that because I have technology issues, which I've been having lately since this latest upgrade. But you will try to go live. If not, of course, you'll see a recording of it. But super excited to have David on the air with us tomorrow. Mike and I will talk very little. David will talk a lot. And then, of course, we'll be asking him questions back and forth and have the option for you to answer questions or ask questions through the chat. So that's a little preview tomorrow. You'll see an announcement later today making that formal with the link and everything. So with that, thanks for checking us out today, and we will catch you tomorrow. Have a good one. Bye.